Welcome to the Thursday Retire Rich call. We will get started here in just 1 minute as we tick over to the start time. Looks like I'm getting the thumbs up, so I'm coming in loud and clear. Scoot up so that I'm in focus here. Got a haircut, feeling good. All right. Let me go ahead and share my screen here real quick for us. Pull up my Firefox, then we'll go to Coin Signal or Coin 360. That's what I'm trying to say. All right, it is officially time. So let's get rock and rolling here. So we have had a kind of a choppy week flat after we had that huge crash down to 60K on Bitcoin. Everything else is following suit. So you can see we're still having a red day, bit of a pullback today. Stocks mixed. There's been a lot of shenanigans, I guess you will call that. A lot of movement in the stock market as well. A lot of the AI fears of basically AI working too well. 6 months ago it was, oh no, we don't think that, that AI is going to be utilized as much as we thought. Maybe this whole giant AI data build out is not going to come to fruition. It's going to be a bunch of wasted capex spending. And boy, has the market and sentiment shifted and the narrative shifted. Now it's AI is going to take over everything. AI is going to displace everybody's jobs. AI is going to destroy the software as a service industry because you could just vibe code your way to a perfect replica of some other software license. And so a lot of the software stocks have dropped off precipitously. The Mag 7 stocks are down since the beginning of the year, big time. And that's where we are. So if we look at Bitcoin, Bitcoin had this big drop, of course, down to 60 grand 2 weeks ago. Was that 2 weeks ago? Ish, something like that. About 2 weeks ago, right on our call. And then we had a little bit of a rebound, but now we're testing that back down again. So not really a measurable bounce here. That's looking pretty weak. It would not surprise me to have a revisit right back down to, that 60K level as well, considering we're looking how weak we are here. And then on the monthly, it's just looking horrible. I mean, 1, 2, 3, 4, 5 candles on the monthly. The last time we had more than, I believe, 3 in a row was back in 2018. And now we're possibly going to have 5. I mean, it's probably going to be 5. 1, 2, 3, 4, 5. I mean, unless we close over 78 grand and we bounce by the end of the month, there's going to be 5 negative candles in a row, which is really, I mean, the fastest exit we've seen in the Bitcoin market since the very bottom, as a matter of fact, of 2018. So you can see even during 18, we had a huge red month, big jump on the green, red, green, red, green, red. And it was only during these last months, the last couple months, right? We had this huge 1, 2, 3, 4, 5 big drop, and then the final candle, and that was it. That was the end of the bear market. So it doesn't mean that we can't just keep bleeding out until October, but we should have some kind of a bounce at some point. This has just been kind of going in fast forward, which I, for one, would love it. If we're going to get a bear market, I'd rather have it just done faster instead of dragging out until, Q3, Q4 of this year. But yeah, really 1, 2, 3, 4, 5, 6. The last time we had this many candles in a row was the end of the 2018 bear market. We didn't even have that last time during the, total FTX capitulation here. Worth mentioning, though, is that we did have this big drop off all the way down to, I guess we went all the way down to 17,000 in 2022 by June. And then, we kind of stayed flat really until March, relatively speaking. I had a little final drop off in December, but I mean, really from that low of 17 to 15, it's not really all that much. So this time around, we'll see how it goes. But so far, I mean, it's just been an orderly exit out of the market. And, we'll see if the 60K holds. If not, 50K is in the cards, like we mentioned. And then I think an all-time, low, if we get that low, which is not off the cards, it's not out of the realm of possibility, is that, a low of 38,000 or so if we go that far. So let's kind of talk about what is causing this and what could really reverse all of this. Number one, treasury bills are seen as a primary driver of Bitcoin's price, according to a new report. This was kind of interesting, right? So for the longest time, Bitcoin was correlated with M2 money supply. Then it broke correlation. And then we realized it was more of a liquidity game. And now drilling down into the liquidity game, it has a lot to do with T-bills. So T-bill issuance is the primary liquidity metric that impacts Bitcoin's price and not the Federal Reserve or any central bank's balance sheet. So not M2 or the balance sheet. According to a new report by crypto investment firm and market maker KeyRock, every 1% change in global liquidity levels impacts Bitcoin's price by 7.6% the following business quarter in which new money is created. So there's some time it takes for it to seep into the market after it's created. Specifically, T-bill issuance in the US has about an 80% correlation, 80% correlation with Bitcoin prices since 2021. And this metric leads Bitcoin prices by about 8 months. So when the Treasury ramps up T-bill issuance, it is financing spending that then flows into the real economy. So it's got to trickle its way down through and eventually into risk assets like Bitcoin. So T-bill issuance falls, when it falls or turns negative, that fiscal tailwind fades. And so let's take a look here at this chart here. So we can see Bitcoin price, Treasury issuance, um, with a little bit of a lag. I mean, it's pretty damn close here, really. And you can see that T-bill issuance has been dropping off a cliff, really since the 2025. I guess there's a little bit of a decorrelation here for a little bit, but then it's kind of followed it pretty closely. So let's continue on here. Despite this high correlation, institutions and ETFs have dampened Bitcoin's sensitivity to liquidity conditions by about 23%. The analysis contradicts the widespread theory that interest rate policy set by the Fed is the primary driver of liquidity, impacting risk asset prices, and forecasts that global liquidity will impact Bitcoin prices in late 2016 and early 2027. So we can look at this by, it leads it by 8 months if you overlay that with an 8-month lag. So the blue is T-bills with an 8-month lag, and then Bitcoin, you can see that there's a pretty tight correlation for now. We'll see if that continues. So here's what this means for us. And it's not just Bitcoin. I'm sure it's altcoins as well, because as goes Bitcoin, so goes altcoins. Looming wall of U.S. debt maturity means more liquidity is coming. So basically, here's the deal. We have in the U.S. $38 trillion of national debt that is maturing over the next 4 years. And this was taken stupidly by Janet Yellen. And then I guess it was it? Maybe it was Jerome Powell as well, under the Biden years as well. Some of this was done with Janet Yellen. It was taken at very, very short-term maturity. So when interest rates were super, super low, like basically zero, instead of locking in long-term rates, they did short-term, which now that rates are much higher, that is going to come back and bite us in the ass. So the U.S. Treasury will have to refinance that debt at a higher interest rate, much of which was financed at near zero interest rates. So unlike a smart, financial analyst who would have taken out as much debt as possible on the longest term possible when interest rates were cheap, they took out a ton of debt at short-term rates. So now we have to refinance all this at a much higher rate, which is going to cost us far more. So the end effect of that is the U.S. will likely ramp up Treasury bill issuance to roll over the debt. T-bill issuance is projected to reach and sustain 600 to 800 billion per year through 2028. So, meaning that if we do a bunch of T-bills as this starts to roll over the next couple of years, 600 to 800 billion per year, then looking back at this chart, that means that T-bill issuance should be coming back up, which will help the Bitcoin and crypto prices as well. So remember, 600 to 800 billion a year, that's going to raise this up a bit here. So that would be good for us and good for crypto, but maybe not good for the U.S. consumer. I guess inflation's still falling. We'll talk about that shortly. So the Bitcoin 2024 buyers are steady. Steady Bitcoin prices. Trader sees 52 grand in the next week or so. So if we go back here, let's zoom back. Let's look at what happened let's look at weekly. Let's look at what happened in 2024. So 2024, we are referring to this area right here. So basically, Bitcoin just kind of went flat. And this is what we're referring to, is we had this big run. We had the bottom. Okay, everything sucks. Hey, ETFs are going to be a thing, right? And then boom, right here in October. And for reference, we were just kind of churning. Hey, ETFs are going to be a thing and be approved for Bitcoin. And we just ran. We ran straight from 27K straight up to, what was this? This was 72,000. And then the Japanese yen carry trade unwind happened. And that basically essentially had us do like a sideways crab walk. For some of you who are here, you remember that because we covered it extensively here. We ran in essentially a choppy sideways move from March all the way through November. So, just sideways down crab walk before we finally bust out of that. And so that's what we're referring to here when we're talking about these buyers from 2024. So far, they're holding steady. Those 2-year Bitcoin hodlers have absorbed seller pressure in recent weeks. So the 2024 have absorbed the new sellers as the Bitcoin treads water around 45% below its October 2025 all-time high. Buyers from long before that event are holding up the market. So basically, it's the people here. Let's move this over. It's basically everybody who bought in this box, that are still, some of them are a little underwater, some of them are still in there. This cohort, which was, a good 6 months of people who've held those coins, are the ones who are averaging back in at those prices. So we can skip a lot of this, but researchers reference the 7-month consolidation structure that characterized much of 2024, which itself placed old all-time highs of $69,000 from late 2021 back in focus during that time period. Now, those buyers risk or face falling into unrealized loss, but so far are avoiding capitulation. So the defense of the 60 to 69K range suggests that medium-term holders remain resilient, allowing the market to transition from impulsive decline, basically, oh my God, I bought at 120, I'm getting out now that we're at 80, sell it all, sell it all, sell it all, to range-bound absorption. So being able to buy a little bit more at that price range. So the question is, new Bitcoin price lows, quote, in next week or so. As Cointelegraph reported, Bitcoin traders have little faith in the current range holding as support with 50 grand as a new popular target. Humans are funny and we like round numbers. There's a weird thing about that. Quote, expected a quick bounce to reset indicators, then straight back down. I believe that 52 to 53K is coming in the next week or so. One such forecast from trader Roman stated this week. Earlier, Cointelegraph noted rare lows in weekly RSI, which with analysis, there we go, hinting that such levels were a once per cycle phenomenon. So again, we're watching these levels. I've had this for a while. This basically is a 50K level, 49.5, that was, acted as a bit of resistance here, broke through it, support here on the very end of that wick. So if we break down through this 60, then yeah, 50 is definitely in play. So we'll be keeping you up to date on that this week. Now, on the opposite end of this is that the consolidation we've seen nears turning point as 70K comes into focus as a possible upside. And really over this past week, it looks terrible in the weekly, but if we go back to the 4-hour, there we go. Ever since the 60K, we just seen these weakening bounces, which isn't looking too promising, honestly. We bounced all the way back up to 72, and then back down to 65, back to 70, down to 65, 66. So really, unless we get a big impulsive move upwards, this just keeps slowly putting in lower highs, which is not good to see. So if we continue on here, Bitcoin trades in a tight 65 to 70K range on Wednesday. This is yesterday, a structure that has held the last 2 weeks since the low. Lower time frame shows a bullish divergence, signaling fading short-term selling pressure, while futures data indicates fresh long position to opened from 66 grand. So the bullish divergence rests near a support level. On the 1-hour chart, Bitcoin's forming a descending channel similar to last week's structure that proceeded to move towards 70. With this channel, a clear bullish divergence is developed in the RSI indicator. So a sustained break above 68K may confirm momentum, leading to a price rally to the external liquidity and resistance level above 71. So basically, we had this downward channel. If we broke it, we move back up. If we can somehow break above that, which now we're getting closer to the bottom of that channel, if we break through that channel, it's all over, but then this idea is kind of over. So the invalidation level sits below 66K, where internal liquidity is present near the 65 grand level. A breakdown beneath that region, which is what I just mentioned, invalidates the divergence setup and shifts focus to a higher time frame support around 62 to 60. So basically revisiting this bottom channel here where we have this big giant wick. In fact, that wick would be the new target. And we just kind of keep grinding, sideways down. There we go. Since September 15th, roughly 250 million in aggregated long positions have occurred, forcing leverage positions to close below 67,000. These long side sell-offs reduce excess leverage, which may stabilize the market price and create a better condition for uptrend once traders re-engage in the market. So the futures momentum, it's interesting this time around. Futures and options have become really outsized in how the market price discovery is shaped this time around. So we kind of have to pay attention to this. A sharp drop in Binance Bitcoin futures power 30-day change. The index fell to negative 0.18, matching levels last seen between April and May of 2024. So this person said that this may mark a turning point for Bitcoin. A similar deep negative reading between April and May of 2024 led to a strong rebound that pushed Bitcoin back over the 100K level. So basically saying that the last time we were at these Bitcoin power levels was right here in this box, right? So that kind of prelude was the prelude to the ramp back up. So liquidity heat maps shared by Bitcoin trader Dan show dense liquidity clusters below 66K and above 71, pointing to areas where stop orders and resting positions are likely concentrated. So we're either going to get a move below 66 or above 71. We'll see how that kind of goes. Now, the Bitcoin ETFs sees a 133 million outflow as sentiment stays in extreme fear. So ETFs are still into the negative side. Spot ETFs continue to bleed yesterday and Wednesday as the market sentiment remained negative. Trading volumes remain subdued at less than 3 billion, so ETFs aren't seeing those massive inflows that we would like to see with a recovering price. If the ETFs fail to recover Thursday and Friday sessions, that would be today and tomorrow, this week will mark the first 5-week outflow for Bitcoin since last March. Solana ETFs, however, are bucking the trend. So Solana is seeing inflows in their ETFs. So Solana ETFs have recorded a 6-day streak of inflows with year-to-date gains totaling around 113 million, whereas year-to-date Bitcoin ETFs are down by 2.5 billion. So crazy, quite a bit different. Whereas Solana ETFs are up, even though the Solana ETF or Solana price is down. So the crypto market remains in extreme fear, with Bitcoin being down 24% year-to-date, down nearly 50% since the all-time high. Even though Bitcoin has slightly recovered from monthly lows around 60, indexes remained in extreme fear. In fact, I can skip over and pull that up. You can see we're now at 9, which is still pretty low. In fact, I mean, just the last couple days/week, we've been at a historic. In fact, I don't know that I've ever seen it tag 5 before. If it did, let's look at this because this has been kept since 2018. There's one day in 2019, which it's hard to hate the user interface on this, but the only time we might have even matched this was during a crash in mid 2019. So other than that, I mean, even during the FTX debacle last year, we got to 6, at the absolute worst of the summer selling. Again, summer, that was during the Terra Luna collapse. That was actually before FTX. FTX didn't happen until later in the fall, which you can see even then it wasn't as bad. But this was during the Terra Luna collapse. And that's when Bitcoin ran from a high of 69K in December to 17,000, basically near bottom. So we hit that at the near bottom. Of course, we ended up losing $2,000 worth of price from 17 to 15 over the next 6 months. But right here, the fear being at 5 is just crazy. It's rare that you see this kind of setup as far as, how low that goes. So analysis at major financial institutions, including Standard Chartered, predicted that the Bitcoin price could fall as low as 50 grand before potentially recovering to 100 grand later in 2026. According to the crypto analytics platform CryptoQuant, Bitcoin's short-term Sharpe ratio has reached levels historically associated with, quote, generational buy zones. The arrows in the chart indicate this clearly. Each prior extreme negative reading was followed by violent recoveries to new highs. So we'll see. It's always tricky to call exact bottoms, especially when we are only, 3 months, 4 months into this bear market, I guess, from October to, 4 months into this, when it could last a year. It's hard to say. However, generally, if we're at 50% down from the all-time highs, starting maybe an average in versus trying to hit the exact top, that's always a bit tricky. So let's continue on here. I thought this was kind of interesting. This is what they were referring to. So Bitcoin's short-term Sharpe ratio hit a level historically reserved for generational buying zones. Now, again, generational, thank you, buying zones doesn't mean exact bottom. It just means that generally speaking, this has been a fantastic opportunity to average in. And if we zoom in on this a bit, if this will pull up for me, I don't know why X is going so slow here. You can kind of see here, at least in 2015 at that bottom, at 2018 at that bottom, at 2022 at that bottom, and possibly now. It's never been, as good of a time to possibly average in. So I don't know. It would be quite a surprise, right? When everyone and their mom thinks the 4-year cycle is in and that we absolutely mathematically must have it go a full year after the top to reach the bottom. It'd be really interesting to have us only go negative 55% down and it, basically at bottom within 4 months. That'd be pretty interesting. So if really we look at the price range from the absolute peak to the absolute bottom recently is 52%, I guess. So somebody else thought it was 55, but yeah, so 52%. We'll see. We will see.